air traffic controller, baby. Well. If it isn't Friday, what is going on, crypto fam? Happy Friday and welcome back to Sin City Crypto Live. Robin and Rocco are coming at you live from our studio. I am coming at you live from Golden Valley, Arizona. Family getaway. But before we get to content, quick disclaimer. Nothing that's said on this channel should be taken as financial advice. So please, as always, do your own research. I am your favorite co-host, David. And with that out of the way, I'd like to introduce you to my favorite co-host now, Big Rob. What's up?
Hola! It's your boy, Big Rob, back in the house. Welcome to Sin City Crypto. If it's your first time checking us out, we are an entertainment-focused cryptocurrency channel where we take the old, the boring, the stale information, we package it up in a fun and sexy way. Also, here at Sin City Crypto, we don't just do live streams. We also do the deep dives and other content. Check those out. This is live stream, in case you haven't figured that out yet. Now, I do want to give a little roll call here. So, we got Hindi first in the chat, Brokey Yoshi, and then HP, Nordy, Olga, Mark, Sir Babe, Luis Rivera. We also got Hadir, Jason Squires, and Fino. Oh, Destroyer, almost forgot about you. What's up, man? What's up?
1911, baby.
That's right. Your boy over here by himself in the studio. Just me and Rocco.
You miss me, bro?
Not really, honestly.
Yeah,
like one of those, you know, when the substitute teacher comes in, everyone's like, yes, thank you. Thank God.
You know, that was kind of a rhetorical question, but it's all good.
Yeah. Where the hell are you at? You know, the sad thing is he actually told me, and I'm being genuine, that I literally don't know where the hell he's streaming from. Where are you at again?
Arizona.
Oh, yeah, that's right.
I'm at my father-in-law's house.
All right. Yeah. Well, dude, a lot going on in the market, man. CPI, very similar to CRY. Make you cry, you know? So,
amen to that, bro.
You know, we'll get into it. You know, everything is on shaky ground right now. And you got crypto basically teetering on this $29,000 support level at the moment. You know, we're under the 30K. It's, you know, we smelled out yesterday the CPI coming in higher than what people would like. You know, 8.3% was what I tweeted last night. And if you guys aren't following us on Twitter, Sin City Crypto 1 at you know, that's our handle there. And so last night I'm like, oh man, that CPI is gonna come in at over 8. So immediately I was like, hey guys, this thing's about to tank. You know, because if your previous 8%ers have told you anything, is that it's not good for Wall Street. But I think the sentiment was, hey, we raised it up 0.5% last Fed meeting on the federal interest rate, and so that should start easing inflation. Wrong. So you know, before I get into the charts, I'll just kind of explain how this thing works. Okay. The U.S. economy is a machine. It's a giant
broken machine.
Yeah, well, there's so many moving parts. And at the end of the day, one piece of one tool that the Fed has is to adjust interest rates. One. Now you got to remember, you have policy making at the top, money printing, quantitative easing, circulating supply, you know, a whole host of things. You know, you have trade in there, GDP. Anyways, there's so many factors that go into our U.S. economy, global economies, any country's economies. That's simply adjusting an inflation rate and waiting 4 weeks and being like, "Well, you know what? We've been printing money like crazy. I think it's 70 or 80% of the money supply that is in circulation at the moment was all printed or all came to fruition from 2020 onward. Well, let that sink in. You know, we have absolutely exploded. I mean, what do you think would happen to the price of Bitcoin? Because right now there's 19 million Bitcoin. What would you assume the price of Bitcoin would be if it went to 50 billion Bitcoin? I mean 50 million, excuse me. You know, if you 2 point something multiplied the supply. If the supply of Bitcoin went to from 19 million to $50 million, which is pretty on par for what the circulating supply of the US dollar did in the course of 2.5 years. Pretty comparable. And so, you know, we understand the economics behind a token and circulating supply. It's really no different when you look at the fundamentals when it comes to a fiat currency like the US dollar. And we've seen just time and time again all of this money printing, and it's not slowing down. And so just to have the basic expectation that, hey, we're going to raise our interest rate up 0.5%, everything's going to be fixed. That's not the case. And, you know, it's kind of like somebody, you know, I compared to somebody, you know, spending 2.5 years eating nothing but candy and junk food and fast food, and then going on a diet for 3 weeks and then not being happy that they're, you know, back to their original weight. And
that's a good analogy.
Yeah, it's essentially a change that has to happen from the top bottom. And, you know, you can't just all of a sudden cut out your sodas and still be eating a bunch of crap food and be like, well, you know, I cut my sodas out. I'm like, you know what? You need to cut your sodas out. You need to, you need to eat, you know, vegetables and all that stuff. So, hey, David, guess who's back up in the chat? Algosaurus is up in here, bro.
Algosaurus, my dude.
I ain't seen that fool in a minute.
Well, and it's weird because we haven't put Algo anywhere in the thumbnail, title, or the tag. So, Algosaurus, either way, we're excited to have you. Welcome back.
That's right.
I think you hit the nail on the head, Rob. Is just, you know, and the diet analogy you use is great. You know, you can't expect after 3-4 years of ruining your health to just get back on track in 3 weeks, 3 months. It's going to take time. And so me personally, though, I was surprised we came in over last month. We came in over. I thought we'd at least get to where we were, or maybe a little under. I definitely didn't expect us to be under 8%, but to be 30 basis points over last month, last April to this April. I was a little surprised, but again, it's going to take time. By the end of summer, going into fall, they're going to ramp up the quantitative tightening. They're going to continue. Now, they're going to halt the interest rate hiking in September. That's out of the window, in my opinion. You're going to get another 50 basis point this month. You're going to get another one next month. They're off the following month. September, come back. I wouldn't be surprised to see a 3/4 one, depending on where inflation is. So we just got to hang in there. And, you know, the title of the video for the stream today, recession is the best case scenario. We are going into something much more worse than recession, in my opinion. Looking at the numbers and the stats, and we're actually going to discuss that in our hot take, so I'm not going to give it away. But I honestly think at this point, a recession is the best case scenario for our economy, and I'll kind of explain myself as we get to the hot take.
Yeah, so I'll just I'm gonna first get into the inflation first before getting into Bitcoin. So taking a look, so the inflation numbers. I'll pull up my laptop there, Rocco. So inflation is officially at 8.6%. So last month we were 8.3. We were as high as, what was it, 8.7 2 months ago, right? Or was it 8.5 or?
I think we capped out at 8.5 in March.
Okay. So yeah. Anyways, we are okay. So yeah. This is the highest. So excuse me. So anyways, instead of decreasing, going closer to the 7%, you know, the Fed's ideal interest rate, or the Fed's ideal inflation rate is 2%. That's where they're targeting, which is funny because it should be closer to 0. But you know, even with your crap target, that's like going to school and then being like, hey man, we're trying to get B's here. Like, what do you mean you're trying to get B's? Like, like, well, I'm shooting for a 3.0. That's where we want to be. Like, no, you want to not have inflation, period. You don't want to lose value in your own currency.
Well, people, including a lot of economists, would argue that, including myself. I think a little bit of inflation is good, but obviously,
I adamantly disagree. I think we've been brainwashed to accept the fact that inflation is good, and I don't care what Here's the thing: you can look at traditional models, you can look at newer models, you can look at Bitcoin, and if you just do the mathematics, inflation is a negative, even in a smaller amount. And the only reason that we've been brainwashed that 2% is okay is because you don't notice 2% on the short-term scale. And you have to zoom out, and you got to think about it. When we were at 2%, for years, we went from like 1985 to 95, and instead of gas being 70 cents, it went up to $1.20. But that took 10 years, and you're like, okay, well, that's not bad. You know what I mean? Like, the price of gas went up. It's just they keep it at 2% because it's just enough percentage that you don't realize it until you zoom out. Until you're like, yo, a TV used to cost $100. Well, Black Friday, you can still get one for $100. But, but you know what I'm saying? It's the price of rent. If you looked at the price of rent in 2020, for an example, when you had ideal inflation, the price of rent in 2020 was still well over $1,000, and the price of rent in 2010 was not that high. And so you're bleeding people out, and the rate that people make, the earnings are not matching that. And so anyways, the 2% is what they're shooting for. They're falling way short of that. We're at over 8%. I want just to get a breakdown on the numbers here. So this here is the breakdown of the 8.6%. So food is up 10%. Look, your food at home is up 11.9%, with the biggest increase coming from meat, poultry, fish, and eggs. So if you are a vegan, you are in a good spot right now. So congratulations to you. No dairy for you, and no poultry. So. Now
look at fuel oil, bro.
Yeah, I haven't even got in there yet. That's obviously where the biggest account for. And so, the fact that people were expecting lower numbers, ourselves included, all you really had to do was just look at the breakdown and then open your eyes and think about, like, where are we at realistically? And like with the price of fuel, because fuel is, look at this, and this is an average, so it's all accounted for. So just the energy sector from top to bottom is 34%, and the energy commodities 50%. Fuel, so your barrel of oil here, over 100%, and then gasoline, just your regular gasoline at the pump, up 50%. And so this is where most of the inflation has come from, that they're pulling down from their numbers. And so the writing's been on the wall. And we see, and the scariest part about it, keep this in mind. If you think that this measly 0.5% interest rate hike that the Fed is doing, which is we were at over 2% going into the pandemic. So in 2020 we were at 2%, and now we're still shy of 2%. We're not even we're at technically 0.75, but they actually give it a range of 0.75 to 1%. But anyways, we're at sub 1%, we're going to raise it up 0.5%. It's not going to do anything because why? Because the most weighted metric for this inflation comes from the energy sector. And what happens to the price of gas in the summertime? Every summer, what happens to the price of gas? You can take out the geopolitical stuff, the Russia stuff, like the price is going to go up. So whatever the price is now, we're at a $5 average is going to be higher than it is right now because the start of summer is on the 22nd of this month. And we all know what the price of oil does. And so I see no relief. Inflation is here to stay. Yeah. And then,
I was driving down here and I passed a gas station on an empty highway, $6.30. And you know what else I figured out that's kind of funny? You know how they get these inflation numbers? They literally have census people go into stores and say, what were you charging for this last month? And what are you charging for it this month? And that's the majority of the data they get, how they get the data for the inflation numbers. So pretty funny.
Now, we're about to turn over here to Forrest in a moment, but we got Bitcoin at 29,000. So all said and done, we're at 29,000. I do think over the weekend we're going to be testing. We're going to be testing the what was the old the recent low was like 28.3 or something of that nature. I think it was.
You're talking about that big wick?
No, the wick hit 26.5. That was 4 weeks ago.
25.5.
Yeah, 25.5. But ever since then, we've been bouncing around. At the lowest end was mid 2800s, and then at the higher side was like 31.5, I think it was. But either way, so for me, if we test the lower 28s, I think with the temperature in the room with the inflation and basically the stock market. Oh yeah, stock market. Look at this, man. NASDAQ. So anyways, as we mentioned, they're straight taking lumps over here. NASDAQ down 3%. They were down 3.5% yesterday. So compounding days of straight red.
And the VIX is up 8%.
Yesterday Bitcoin held up pretty well. So, everybody says that, Bitcoin's correlated. I think on the macro sense it is, but on the shorter term, day to day, you do get a lot of deviation. So Bitcoin held up pretty well against the NASDAQ and global markets yesterday. So let's see. We'll see. I think we're going to be in 27,000. That's my personal feeling, my gut feeling there. But who's got a better feeling? Better gut feeling about these things, and he don't use gut. He don't use gut. He uses the charts. Either way, we're gonna patch in our boy Forrest here. So without further ado, hey,
there he is.
Hey guys, how's it going?
Good, man. How you doing?
Doing well. Been better in terms of the portfolio and crypto outlook in general, but we're around for the long haul. We'll get a bounce back eventually. Give it a couple of years.
Yep. We do what we can, right?
Everything's on sale right now. That's the way I look at it. Everything's on sale.
That is true.
Like literally, like.
What are your thoughts, Forrest? What are your thoughts on the CPI numbers coming in higher than they were last month?
Yeah, so I think you guys hit the nail on the head. I joined in about 3 to 4 minutes ago, caught the latter part of your conversation. It's all oil and energy prices. We'll get into the crude oil charts in a minute, but oil at $60 is fine. Oil at $120 is not okay. And I think that's driving a lot of the inflation. And until they address that, they can address inflation through interest rates all they want. But if the root cause is not just that it's easier to borrow money, and the root cause is actually that it's high energy prices, then you've got to address oil prices, right? And this whole, I don't like to get political or anything, and I know there's like this whole like global warming and climate change narrative around fossil fuels, but this whole, honestly, I'm going to call it nonsense. I think there's a lot of nonsense out there about how these higher oil prices are part of a transition into a sustainable future. Like you can't rip the Band-Aid off that quickly, especially when you've been irresponsible about printing money for the last 2 years, and it just absolutely crushes the average person with these higher prices. So there's you know, you can be on one side of the spectrum or the other in terms of your stance on climate change or renewable energy. But sending oil from $60 to $120 a barrel is not an appropriate way to go about that. That is not a smooth transition period whatsoever. So,
You know,
yeah.
I always question the fact that, you know, the U.S. exports more oil than it imports, and the imported oil, a very small amount of it, at least as far as a piece of the pie, came from Russia. And so the fact that we've more than doubled the price of oil here, or at least the price of gas here at the tank or at the gas station, I feel like there are companies that stood more to gain from this, and basically, you know, they're ratcheting up the prices. Because I don't think the price of gas needs to be what it is here in the U.S. And, you know, you could make a counter argument for perhaps like Germany, where they relied heavily on Russian exports. But here in the U.S., we did not rely heavily. And so I think you're looking at a global price that, you know, you have oil at certain prices overseas where they're more dependent on Russia, but here we're not. And I think you have companies like Exxon and then like British Petroleum that they see a price gap, and they basically fill it in with, you know, by adjusting the prices here at home, even though it doesn't necessarily need to be justified, because a lot of our oil used here is homegrown or home mined, you know.
Used to be.
Yeah, well, I'm saying on a global scale. So I think that, you know, the price of oil has went up globally, and so I feel like I don't know. You know, it's not a coincidence that Exxon is breaking records as far as profits. That's all I'm saying, right? You know, everybody's hurting, but who's not hurting is the oil company. So,
yeah, for sure. And it's not only that. When they go and raise the prices of gasoline, that causes price increases across every sector, because whether it's, you know, merchandise or products or whatever, all of that stuff has to be transported, and mainly using gasoline or other forms of energy, coal, what have you. But there's also petroleum byproducts in almost every product. Like everything that's made out of plastic has petroleum byproducts. Like everything runs on oil, whether it's being transported with oil or it has a petroleum byproduct in it. So when oil prices go up, it affects everything. So I agree with you guys. I think that is the root cause of this inflation we're seeing. And until that's not necessarily something that like everyone's paying attention to the Fed, but that's not necessarily something that I think the Fed has a lot of control over. I think it's the presidential administration that probably has the most effect on policy and affecting those prices. So that's kind of the direction that I'm turning my attention towards, not just looking at, you know, interest rates hikes, because I don't think interest rate hikes are going to they haven't proven yet to bring down inflation. So we'll see.
in the 80s they increased the interest rate hike. Okay, so this is the highest inflation has been since 1981. And what happened in 1981 was that the inflation was out of control, like it is now. And what they did to combat it was they put the federal interest rate at over 20%. And so basically they just forced a deep recession and just stopped trading on Wall Street, essentially, at least from where they were. And so
and then look what happened after that. Right, you had a few years of a deep recession, and then the late '80s and all the way through the '90s. I mean, this economy was booming. So,
but they're not going to raise it up anything crazy like that. That was a different time than it is now, and so I don't know, man. And, you know, I think the root cause of the problem, and I was addressing it in the beginning of the show, was the root cause, in my opinion, was the fact that we've more than 2.5 times the money supply here in the U.S. And I gave the analogy: if you took the 19 million circulating Bitcoin that we have in supply, and all of a sudden within 2 years you made it a circulating supply of 50 million, we all would know what would happen to the price. And that's just because of just supply, demand, price movement and just in natural inflation. We can identify that because we trade crypto all the time, so we know what that correlation is. And realistically, there are more moving parts to the federal government, but when it breaks down to the most simple and nuts and bolts of it, if you more than two times the supply of our money here in the States, you're gonna see inflation. And the idea that the government would say, "Oh, it's transitory. No need to worry here." Like it's nothing to see.
It's a whirlwind. It's a whirlwind of crap that's not stopping anytime soon. So, Forrest, we are going to turn this over to you, my friend. Do your thing.
Awesome. I'll share my screen here, and we'll just jump right in. So the chart that I want to start off looking at is crude oil. This is what's going on right now. And this is on a logarithmic view. I'll switch it off the logarithmic chart for just a moment, just so you can see what actually happened. We went from negative, a wick down negative with the pandemic crash, the decrease in demand that we saw, to a restored demand, but quote unquote a decreased supply, right? This is supposedly due to a decreased supply. Whether or not that's due to the Russia-Ukraine war or people just price gouging, or the company's price gouging, regardless, there's plenty of other variables and factors, right? Rather than just decreased supply. But we're pretty much at all-time highs. I'll draw kind of this price line over. We've had very, very few times where oil has been this expensive. Right. And what happened after oil became this expensive, $147 a barrel? Well, we got a recession, and that was in 07 and 08. Obviously, there was other factors at play, not just oil prices. That was, obviously, real estate and whatnot. But we're seeing a spike again, and we're seeing it spike really, really fast. I want to see oil prices come down. When oil prices come down, I think we'll start to see some relief in inflation. But until then, we're a little bit in trouble, I would say. I don't see inflation coming down and us moving back into an expansionary period in the cycle and a bullish cycle until oil prices do come down. So hopefully they do come down soon. And yeah, that's what I'm watching. And we're already starting to see, this is the S&P 500 in the white. Right, obviously we crashed last time we spiked this high. We spiked up to the red bands before our recession back in 2000 and 2001. Obviously, oil prices were not the only factor there, but they were a factor and a big variable at play, especially with the war in the Middle East. Right, and we saw this again in 1990, where oil prices briefly spiked up. And what does that cause? That causes a dip, right? A dip in the S&P 500. So, yeah, this is what I'm watching, and I would expect this trend to probably continue to some degree as long as oil prices stay high. There are other variables at play, but there's this idea that usually the S&P 500 and the legacy market does rally into midterms. But when there's other bigger variables at play, it's very difficult to turn the narrative when things are this bad in favor of the economy doing well. The economy is really not doing well right now, and the average person doesn't have money to go investing in altcoins or even large cap cryptocurrencies. We'll go to Ethereum and Bitcoin in just a second, but now, in my opinion, is really not the time to be heavily exposed to low cap altcoins. Right, we don't want to be. If you just look at the smart money on Nansen, right, and we'll go to Crypto Stackers Pro so we can pull up some of these levels in just a moment. If you look at smart money, they're pretty much consolidating into Ethereum. They've even on the Ethereum chain reduced their positions in wrapped Bitcoin. Now, whether or not they're accumulating Bitcoin off the Ethereum blockchain is to be determined, but they have consolidated some of their positions out of wrapped Bitcoin into Ethereum. And while we're on the topic of energy prices and the energy sector going up, we know that it roughly costs, right? This is an estimate. I've done some math. I've put out an article, done research. It's roughly costing around $7 billion a year in energy prices to secure the Bitcoin network. Well, if energy prices are increasing, there's a higher and higher demand or a higher and higher cost, right, to secure the Bitcoin network, which requires miners to sell more and more of their Bitcoin and reduces their profit margin over time, causes them to sell more and more of their Bitcoin, which can negatively affect the price. That being said, Bitcoin price, all things considered, I think is holding up decently well. I think Bitcoin at $29,000 is doing fairly well. It is over the green easy bands, right? This is not even the time to DCA in, right? I would want Bitcoin at a cheaper price than $29,000 as of right now. I'd want it down below $25,000. I do think we can go that low, right? If we just throw on our margin pressure levels for Bitcoin, we caught this resistance at $32,000, got rejected, chopped around a little bit. And where's our next big margin pressure level from a technical perspective where we would expect some sort of a bounce? $24,000, which again, that's where our green dashed easy band level is approaching. So that is the support level either for a long-term accumulation of Bitcoin or just for a short-term trade. Right? If you're just looking to buy at 24,000, turn around and sell at 32,000, that is on a relief rally, that is a solid trade to make, right? We see, and I know like 24,000 to 32,000, you think that's a really big move. Well, when things get this oversold and they start really pushing downwards, a lot of times the market corrects back to the top side. Right? We see this 1x short to 2x short bounce over and over again, not only in Bitcoin, but a lot of altcoins as well. Initially, we saw Bitcoin peak at $69,000. We saw it catch support on this 1x short level of $34,000. And then we got the relief rally up to 46K, right? And we touched 46K almost 3 times. We didn't quite get there the second time, right? But bounced between this level over and over again. We see the same exact thing last cycle, but in last summer, in June and July, where we came down to our 1x short level. And in the short term, we just bounced and got the resistance on our 2x short level. So that's really the next solid swing trade entry point that I'm really looking for. Buying at $24,000 to $25,000 and catching a relief rally bounce back up to $32,000, right? In the meantime, I do think there is a chance that we get some sort of a relief rally as high as $34,000. That's because that's our big resistance level where the shorts start coming back in. But in the short term, I just don't see Bitcoin getting much higher than $34,500. I think it'd be very, very difficult for Bitcoin to press up above this level. So for me, Bitcoin's largely at the moment in a no trade zone. I really don't like these higher energy prices. I don't think it bodes well for Bitcoin. I do think that Bitcoin is holding up well, but I don't necessarily want to buy any, right? Even in a shorter term trade until it gets down to $24,000. If it drops to 24K, happily we'll buy some, turn around and sell it at $32,000 as a shorter term trade. Now, I want to show you guys the similar levels on Ethereum, as well as show you guys a couple new indicators in TradingView that we've got for lifetime subscribers, right? So you can see here, Ethereum crashing today down to around 16 and change. Right, $1,683 currently. For the most part, we've seen some solid support come in on this 1x short level off of our last local high. If we take the point before we really started to spill back off, we saw this little relief rally that brought us back up to around $2,000. We got resistance. Where's our next support level? Well, we've got quite a few support levels, but they're mostly all in the range of $1,400 to $1,500. Right? I want to show you guys this Ethereum chart really quick and something that I think Ethereum may do. So we've just got some basic trend lines. We've got our support zone over here, right? We've got our 1,400 structural support. We've got these are margin pressure levels, right? We've got sunset levels in there. We've got our $1,700 support that we've recently just kind of broken through. There are buyers below $1,700, but it's just kind of a game right now in the short term of, all right, there's buyers that want that are lying underneath 1,700 trying to push it back up, but there's also some longs that are getting liquidated right now. So it's just kind of volatile in the short term. We're starting to see this wick develop. Wouldn't be surprised if we push down to $1,400. But what I do think could happen is something like this. I just took this fractal and flipped it upside down from over here. And it's not necessarily that I think that this fractal is going to play out or is particularly relevant. It just matches the pattern that I think that could happen for ETH. And that's a push down to $1,200 to $1,300, and then a testing of all of this resistance in here around $2,600 to $2,800, right? So I'll drag that off and I'll throw on the auto sunset levels. So this is an automatic sunset level indicator, similar to our sunset levels in Crypto Stackers Pro, right? If I throw these sunset levels on, we can get some nice, clean, exact sunset levels, and those are simply risk to reward levels, right? It's showing us where do the risk and reward incentives change for buyers and sellers. Well, right now, as we dip below $1,691, which we're barely testing below right now buyers can get a 2-to-1 risk to reward ratio, with the risk scenario being that it comes back down to this pandemic low, and the reward scenario being that we get a retest of our all-time high. So this means that this is a strong incentive for buyers to start coming in. Does that mean that we can't break through this level? Of course not, right? We held it and bounced off of it over here, and then got our resistance at the 2-to-1 and 3-to-1 short, right? And then we came in and broke through the 1-to-1. We could very easily, after we've bounced twice off of the 2-to-1, be breaking the 2-to-1 and go down to the 3-to-1, which is currently at $1,295, which is very in line with this wick structural support over here. So what we're doing in this trading view indicator, which is available for lifetime subscribers of Crypto Stackers Pro, is we're simply what the indicator does is it automatically applies a bunch of sunset levels to all of these local highs and local lows, right? And populates them, and we can get these nice bands of support and resistance. And what you see here is that Ethereum is testing these sunset levels, right? And we've got additional, and they're a little bit translucent and difficult to see, but we've got additional confluence of support down here at $1,450, $1,440, as well as this $1,200 to $1,300 range. So those are our next two support points, right? And if we just zoom out and we look at Ethereum's support in terms of its trend line, this would match up, right? This would match up, and we could get our relief rally or our merge rally. Now, keep in mind, the Ethereum merge is scheduled for August, right? Scheduled for August. So this is why I kind of like this price action, right? We potentially get a move down to $1,200, and then pre-merge we pump. Maybe some people get a little bit scared right before the merge that, hey, maybe this isn't executed, and you can actually see that this price action lines up with the support and resistance really, really nicely. So we'd get support down here at $1,200 to $1,400, a pump up to retest, right? $2,800, $2,600, retest of this support, and multiple tests of this $2,600 to $2,800 resistance, which I don't know that just because we've got the Ethereum merge and that's bullish, I don't know that we can get through this strong of resistance on the first try. Maybe it takes 3 tries, and then we'll see if we can get through and push to higher levels. But that's what I kind of have laid out for Ethereum. That's what I think is a reasonable scenario. I'm not saying this is 100% going to happen, but I wouldn't be surprised if something like this takes place for Ethereum. So tons of support levels there. And then the other indicator I do want to show you guys is if I take off the auto sunset levels, we've got auto margin pressure levels, which is nice because margin pressure levels, if you're kind of not used to picking highs and lows with them, right? Like selecting high and low. This is kind of being more exact, but this is just automatically picking all of these pivot points. And it does get a little bit messy here. Let me get rid of that. Right, and shows you the confluence of support and resistance, right? And you can tinker with the settings to make these a little bit easier to view. I'll turn off the labels and off the boxes, and you can kind of see where we get these big support levels. And we're on one right now around $1,700, and we've got more that line up around $1,280 and $1,400, which is in line with our structural support levels and in line with our sunset levels. So these support levels all line up in this $1,200 to $1,400 region. That's where I think Ethereum will probably catch. Last chart I'll show is probably total cryptocurrency market cap. Nothing too shocking here. Right, nothing too shocking. We are breaking below this long-term trend line, which is a little bit subjective. But remember, this is kind of the zone that we talked about where we could easily see price dip below this trend line, right? And then the Ethereum merge comes along as a catalyst. I'm not saying we're going to make new all-time highs in total cryptocurrency market cap, right? But this is kind of a good support buy zone around $840 billion in total cryptocurrency market cap, which is our previous cycle's high, right? Now, of course, we could get a longer-term recession and break below, and hopefully we don't break down to these levels, right? But we want to be dollar cost averaging in when the market's oversold. And this is a really solid oversold area to start averaging in, or continue averaging in if you've already been averaging in. But what we don't want to be doing is buying crypto up here. We want to be selling crypto up here, right? Averaging out in this zone. We want to be starting to average back in down at these oversold, fearful levels, right? Buy fear, sell greed. Fear is high. CPI is going up. Oil's expensive. No end in sight. We don't know what the future holds. It doesn't look good right now. Therefore, fear is high. Generally, you want to be buying fear and selling greed. That's what all the legendary investors continually say. But that being said, we don't want to be buying stuff that's not going to be bouncing back. We don't want to be buying stuff that doesn't have a reason to go up. We want to be buying stuff that does have a reason to go up, whether that's Ethereum or some other large caps that have catalysts or just tremendous growth opportunities. So I'll leave it at that.
All right, awesome, man. Yeah, I mean, like I was saying earlier, man, I don't know. I just look at this. I know there's a lot of people that are upset. You know, you see the prices down on the portfolio, but this is the time to increase your portfolio holdings as far as what tokens you have and how much of them you have. I mean, I do have some stable coin on the side. So for me, I'm just trying to, in my estimation, time, my best buys. And obviously I'm not going to go all in on one purchase. So I'm just laddering in, and, instead of a dollar cost average at the moment, as far as like a date, I'm looking for these big price targets. So for me, I got my first ETH buy at 1,600, and that's I'm gonna do a few more, all the way down. So
you might have to move that price target down, my friend.
No, the first one I'm still gonna execute at 1,600, and then I'll probably, I don't know, I'll look at the charts. Look at I'll replay this TA here, and then I'll probably I think 1,500 is pretty reasonable for the second one.
I think that fractal forest that you showed, I think that's a very real possibility, and I could definitely see it doing that. If it hits $1,200, I think there's going to be so many buyers, especially if the NFT market's kind of seeing a little bit more volume than it is now. Here's my question: have you heard the whole FUD around the synthetic ETH or the staked ETH on Lido, and how it could depeg, and kind of the FUD around that? Like, what are your thoughts on that? Have you looked into that at all? Like, what's your take?
Yeah. So I was reading into that a little bit today, thankfully. There's a lot of factors and variables at play, but one of the biggest ones is that Celsius, which is pretty much just a crypto bank. You deposit your crypto, they go and lend it out or yield farm with it or try to earn yield on it, and then they give you that, like, 80% of that yield. And whether it's through lending or whatever their yield sources are, they give you like 80% of that, and then they just keep a cut, right? And a large part of that token, or a large part of that yield accrues to their token value, Celsius token. They took their bank, like all of their custody of funds, like a lot of their funds, and they deposited it into staked ETH. Well, staked ETH on Lido Finance is not liquid. You cannot redeem it until after the merge, right? So if there's a bank run on Celsius, which there's a lot of withdrawals from Celsius right now because people are kind of fearful that they're not going to be able to get their money out of Celsius, then Celsius is going to potentially have to do, there's a couple things that they can do. They can take their staked ETH that's illiquid, and they can put it up as collateral and borrow against it to pay out these people's funds. But that's risky because if Ethereum drops, if the price of Ethereum drops, they could get liquidated and lose all of that staked ETH. Alternatively, they could just freeze withdrawals until after the merge, and until after that becomes liquid. But then a lot of people are stuck, unable to get their funds out, which is not a good situation. Beyond that, there's a couple of other funds that are withdrawing or trading out of staked ETH, kind of sending off some alarm bells. But basically, the risk, the net or the long and short of it is that because a lot of staked ETH is being used as collateral, there is risk that if Ethereum drops to certain levels and starts liquidating people in these big funds, particularly Celsius, you could have a massive sell-off where either staked ETH becomes super cheap in comparison to Ethereum, or vice versa, but the price of Ethereum would be subject to kind of this cascading liquidation effect, and we could get a nasty wick down to a really low level before the buying pressure can come in and buy it. So even having really low orders in for Ethereum, if you just have some funds laying around, throwing in an order at something ridiculous like $800 or $600 just on the off chance we see liquidations that low, there's potential for an opportunity down there. Now I'm not so afraid of this liquidation happening that I'm afraid to hold Ethereum right now, because I think if for whatever reason Ethereum crashes because of that and people get liquidated, I think there's a lot of buyers that'll take that as an opportunity, and it'll just kind of wick back up.
It's funny you guys brought up. It's funny you guys brought up Celsius. In researching for the show today, I was like, with the falling prices, I'm like, you know what? I'm gonna start identifying alt projects that I could put 1 or 5% of a portfolio into as my more riskier high payout ones. And I'm like, what really looks good outside of the top 50? And I was looking at Celsius, and I was like, wow, they were number 200 on the market cap list, right around there. And they had hit was it $8 was their all-time high, and they're at 40 cents right now. And going into the start of 2020, when everything was at like fire sale, super cheap, it was around 20 cents. And so we're starting to see those numbers again. So I was out of the loop on those on that Lido story, but I was looking at it. I was like, man, Celsius looks good. I mean, right now at 40 cents, I mean, you're talking a 20x just to get back to all-time highs. And I'm not even eyeballing an entry price here, but I wouldn't. I was thinking, I was like, man, if this thing gets down to 20 cents, it loses half of where it's at now. I do believe in Celsius fundamentals. They're heavily invested in by institutions. Very little amount of retail in there. We've sat down and talked to Celsius, some of their marketing guys, and who do we meet up with Celsius? We did an interview, a one-on-one interview with them as well.
Developer,
developer. We know a little bit about the company from what they've told us, and just from the outside research, it's heavily institution. So I feel like they have less volatility, more upside. I don't know. I just thought it was comical that you guys are covering it, and I was like literally like spending 20 minutes today, like, man, why?
I'd be careful, bro. I would proceed with caution. Celsius dodged the bullet with the whole Terra Luna situation. They literally pulled all their money out like a day or two before the whole collapse happened. So. They're a small market cap. I think their market cap is what, 300 million?
100 million. 100 million. So it's tiny in comparison to the big projects. And like I said, this is still something I'm not even looking to get into now, but I'm just trying to find some long shot plays for when the Bitcoin and crypto markets take a further leg down. When you were talking about the $24,000 Bitcoin, I think that at that moment, that's where I'm gonna start putting in my long shot plays, because I think that's gonna be your biggest discount when it comes to these more risk on altcoins. And so Celsius is one of the ones I got on my radar. But 190 on the CoinMarketCap list, so they're definitely a long shot there. But
hey Forrest, how's your NFT project coming along? Disco Kitties.
Yeah, it's coming along well. I've just finished or almost finished up. It's kind of a rough draft of the slideshow on it, or the pitch deck. Happy to share that if we have time. If not, totally
Yeah.
understand.
Please, absolutely.
I don't.
Please.
Sure. Okay. Yeah. Let's pull that up. Let's see. It's going to be fun. We're trying to launch sooner rather than later. I don't know if you guys can see my screen now.
Yep.
Yeah, so the whole idea here, and is I'll try to be quick with it because I can go into further detail, but we're trying to build listen to earn and probably building on Solana. And I will tell you why Solana is basically the only option. So Crypto Slam, this is just giving us some data on blockchains by NFT sales volume in the last 30 days. If you're not an NFT project on Ethereum, right, and with some higher throughput projects, like listen to earn or play to earn, you need the higher throughput. You really can't afford the gas fees on Ethereum if your users are potentially going to be exposed to a couple gas fees, a couple transaction fees every week, or even potentially every single day. And it drops off by about 85% in terms of sales volume down to Solana, which is number 2. And then to just even get to Flow, the number 3, you're dropping off another like 90% in terms of sales volume in the last 30 days. So if you're a project right now in a bearish NFT market, and you're looking to raise $500K to $1 million through an NFT mint or an NFT sale, doing it on any other chain is just not realistic. So while I love Avalanche, and I would love to launch on Avalanche, and I'd love to launch on Polygon, right now it just makes sense that the money is on Solana. So for the foreseeable future, probably we're looking at Solana. If I go back over here to the pitch deck, it's going to be very simple. We're going to be building a music streaming platform incentivized by a collection of 10,000 Disco Kitties NFTs. And you'll be able to listen to music, at least the goal is you'll be able to listen to music and earn Solana, right? So how does it work? Disco Kitties have a 7.5% royalty, which does seem high, but that's actually the standard for a lot of projects on Solana right now. And really, it's less than a 7.5% royalty. It's really a 2.5% royalty. 2.5% would be going, of this 7.5%, 2.5% would be going to the team to help build out the music player and the listen to earn functionality. And 5% goes towards listening incentives. So you just own a Disco Kitty or multiple Disco Kitty NFTs, listen to music, and then claim your Solana rewards, right? So basically our strategy is to go after productivity-based playlists. So we're music for builders by builders. We're not trying to get Katy Perry to upload her music to Disco, and that's actually a problem that Audius I think has had, is they've not been able to get really, really big people to upload their music. So instead we're focusing on productivity-based playlists, instrumental stuff like piano, jazz, synthwave, lo-fi beats, and we'll facilitate productivity, creativity, and inspiration through music. So target market is people that are into the NFT market. Most of them are sitting behind computers all day, right? Building Web3, right? Or working their job, whatever they're doing, working from home, working at a WeWork, working wherever. They're sitting behind a desk all day, listening to music, and we want to increase their productivity. So we'll have 10,000 NFTs. Here's some sampling of the art, which is 99.9% finalized. We've got some additional layers coming in and traits that are going to be really fun. We'll have exclusive raffles. We'll have similar to kind of like what DGods and blanking on the other project that does this. I think it's Mercury or Blocksmith Labs, where we'll be able to raffle off some music-related merchandise, experiences, or NFTs. We'll have a burn function where you can burn your Disco Kitty into a naked kitty. And yeah, it's very straightforward. It's going to be very simple. All we're doing is taking a royalty fee, and we're sharing the bulk of that royalty fee with the end user to incentivize use of the platform. And by incentivizing use of the platform, we'll get exposure to some of these artists, these lower or not lower, but lesser known artists, as well as build up a brand. So we'll be able to accrue value in that way. Not really looking to launch a token initially. We can just use the base native token Solana because that's what we accrue royalty fees in. So that's the net. That's the summary.
That's cool, man.
Are you not worried?
It's such an emerging
Are you not worried
space
that
with
when
the.
you go to when you go to mint, right? When your people go to mint, are you not worried that the blockchain is going to come to a halt like it has 8 times?
Yeah. So yeah, that's the negative part about Solana. Hopefully they fix that. But unfortunately, that is where the money's at right now. So if we want to launch this project right now, it makes sense to launch it on Solana because other blockchains just don't have the community yet. That being said, for this particular project and the way we have it set up, it doesn't quite matter that much because obviously if it goes down during mint, I mean, people will have an opportunity to mint. But once everything's minted, we can set this split. We can set a splitter contract to accrue the royalties, right? And then we can just make it claimable. Like we can just feed those royalties into a smart contract that is claimable by DiscoKitties owners that have listened to a certain number of songs per day or whatever. And we can just make that claim function, once per week or once per day, right? So as long as the Solana network, comes back up eventually, they can then go in and claim their Solana. But yeah, we could potentially do cross-chain and launch a version on Avalanche or some other chains in the future. But right now, I was really sold on launching on Avalanche and potentially doing a subnet. But they just don't have the NFT volume right now, unfortunately. It's a bearish market.
Oh, that's all I got. You got anything else there, David, for Forrest?
Nah, man, that's a super cool project, man. I'm excited to see it come to fruition, and we would hope that you would bring it to our Sin City Crypto fam when it finally gets launched. That'd be amazing. So we're excited.
Yeah, absolutely.
Awesome. Well, Forrest, thank you very much for your time, my friend. As always, we appreciate you. Our community appreciates you. Maybe we should bring you on 5 days a week because every time you're on, we get a lot of super fans. So.
All right. Well, thanks again.
Nice. Yeah, I'd be happy to come on more often.
All right. We'll see you. We'll see you next week. Thank you again, man. We really appreciate it, man. Tons of great knowledge.
See you guys. Have a good weekend.
All right.
Peace.
All right. And then for our viewers, if you liked the technical analysis, which I don't know how you couldn't have liked that, because I mean it was pretty straightforward, man. I mean, and you like Forrest, for one, you can go visit him on YouTube. He has his own channel. We also recommend you follow him on Twitter. He posts quite often, and he gets ahead of the big moves. So a lot of times I'll see him post something, and he'll be like, "Hey, man," he's like, "I'm calling it how I see it. This is about to drop," or whatever it is. So. If you're into trading,
I sniped on his Phantom trade before it went parabolic, so I made some money there.
And then lastly, we got he also has his software that he was using there with the easy bands. So if you're into to trading, swing trading, leverage trading, we recommend not only when you're looking to invest in a project, we always say do your research, but if you're trading, you should be using the tools at hand to give you all the numbers you need. And so if you're going to get into trading, if you're not into trading, proceed with caution. But if you are into trading, use the tools at your disposal. And what a better tool than the Crypto Stackers platform. And we left description in the description. You have a link to that as well. So. All right. So we're gonna get into the hot take. Let's get into it.
It's hot.
All right. So the hot take for today is as follows. CPI numbers are out. The talk of everyone, economists, Twitter, social media, everyone, is inflation. So the hot take is this. Are we headed for a recession, a depression, or stagflation? Recession, depression, or stagflation? Which one is more likely? Robin, I'm going to send it to you first, my friend.
You would assume that, you would say, you assume the answer for this would be depression, deep recession, stagflation. I actually am going to push back on all of those ideas. And the reason I don't see us all of a sudden flipping and going into a bull market. But I think where we're at now, which is this recession, which probably will last a year. So I guess the answer would be recession, but I don't think it's like some deep recession. I don't think it's going to be on par with the 2008 recession. And the reason being is that in recessions, we have typically seen inflation be subdued, which would be the definition of stagflation. But those are running congruently. And so I think we're just going to kind of hang out where we're at now. I think we're going to pull back a little bit. But what's absorbing all of the, say, volatility is the inflation. And if you didn't have inflation and you didn't print all this money, we would be in a depression right now. We would straight fall off a cliff, and we would be in a really rough spot. But what we did was we debased our money. We made everybody poorer, and in turn, we absorbed the shock of what would be a depression, a deep recession. And I think to have what's called stagflation, you need both a recession and inflation running congruently in one direction. And I think we're just kind of in this little lull period right now. And I think we're going to have minimal growth when it comes to stock markets. I think we're going to have lower than expected returns on stocks. I don't think commodities are going to start pumping. I don't see anything really pumping in our market in the next year. But at the same time, our inflation that we've had, our massive printing has absorbed what would have been the big fall off. So that's kind of my take on that.
All right. So before I give my take, I'm going to read what our friend Algasor said. He said, "Depression for sure, but Washington will package it up in a fun and sexy way and call it a recession." So that's pretty funny. Okay, the answer is so clear that I have never been more clear about something if the trend continues. And the answer is stagflation. Okay? What is stagflation? Stagflation is when the economic growth slows down, interest rates are high, and unemployment rate is high. We saw this once in the 1970s. And the key factor, the wild card here, is a global event that shakes up the global economy. In the 70s, it was the OPEC oil embargo that saw oil prices skyrocket 200-300%. And what do we have now? We have multiple things. We have the war in Russia. We have the supply chain issues. So the answer is stagflation. And I want to share my screen here, and I want to show you guys what exactly I'm talking about. And we're going to compare. So this is from Investopedia, and let me know if you guys can see my screen.
Yes, we could.
Beautiful. All right. So this was stagflation in, this is between 65 and 85, okay? But I want you to pay attention to 73, 74, 75, okay? This is core CPI. We went from 3.6 to 8.3 to 9.1, okay? GDP. We went from 5.6, negative 0.5, and negative 0.2. So there you have your slow economic growth. And then unemployment, 4.9, 5.6 to 8.5. Now, the employment is the only thing right now that we are not seeing as far as the numbers being completely off. Well, that third factor really getting in there. And so what, hold on, let me make sure. There we go. Perfect. Sorry about that, guys. Now, we did see yesterday, Robin pulled up an article during the traditional market, the jobless claims are rising. And here's what else is happening in the world of jobs and employment. You have companies that are calling their employees and saying, "We want you back at work in person." And guess what those employers are doing? Nope. They would rather quit than physically go back to work. And so employers are cracking down.
Hold on. Can I say the same thing about you, David? You need to get back into work in here right now, okay? Just
take a turn.
Just saying. This work from remotely thing is not working.
You know what? It was a good.
it was
good
fun.
for us to get to.
I like it a lot. No,
I thought it was fun too. So, okay, but seriously, right? You have and the employment numbers, right? The unemployment numbers are going to be the last piece to fall in place. So I think we're headed for stagflation. Recession is the best case scenario for the sentiment of the global economy right now, where we are on a macro level, recession is the best thing that can happen. We are not going to a recession. We will go recession, and then once the unemployment numbers start coming in, we are going to get into stagflation, and that could take a decade to get back to where we were prior to where we are now. I know it sounds scary, but if you take bias, you take opinion, and you take sentiment out of it, and you look at just numbers and facts, that's the conclusion I've come to. And so hold on to your money, my friends.
Yeah. Well, I mean, I do think that the path that we're going on is towards stagflation. I just see us. I think the inflation that we had, the amount of money printing that we had, I don't think we're going to be printing more money. I don't think we're going to have any more stimulus bills. I don't think we're going to have any more $5 trillion infrastructure bills. I think that maybe, perhaps, politicians and people in Congress, I think they're starting to see, like, hey man, maybe we overdid it a little bit. Maybe we gave out too much money. And so I don't think we're going to have as much inflation as far as on top of what we already have. I don't think we're going to be printing a lot more money. And so for that reason, I think inflation will come down, but I think people are going to still be hesitant. I think the markets are still going to take their time. And so I don't know. Time will tell.
But to Forrest's point, right? It's the energy crisis. And if you're not doing anything to nip that in the bud, no matter how much interest rates you raise, people still have to pay $6
Sleepy
a
Joe.
gallon for gas.
Sleepy Joe was putting in them charging stations every 50 miles on the freeway, okay? So
this is terrible.
All
right. Let's move on to our talking points. Let's go. All right, so let me share my screen here again, and we are going to get right into our articles. So the first article we're going to talk about today, huge news from MasterCard as they get deeper into NFTs. Payments giant MasterCard has opened up its network for more non-fungible tokens. The financial services company Inc. deals with several prominent NFT marketplaces, such as the Sandbox, to make it possible to buy digital collectibles with its cards. In January, MasterCard scored a partnership with Coinbase to enable purchases on lending cryptocurrency exchanges NFT marketplace. And if you don't know how big MasterCard is, the company had a total of 2.89 billion cards in circulation in the first quarter of the year. So, Big Rob, we'll send it over to you first, my friend. What are your thoughts on this article?
I'm not surprised. You know, out of all of the major credit cards, American Express, Visa, MasterCard is more at the forefront when it comes to the adoption of cryptocurrency. We've seen a lot of their cards that are like, you know, the ones that some of the exchanges are using as an example, be MasterCard. And so, you know, to be the first, I don't want to say the very, very first, but to be like the first major partnerships or major kind of blueprint or game plan to get into NFTs or cryptocurrency in general. Not surprised that it's MasterCard. And, you know, MasterCard does lend out a lot more credit cards to, say, lower income individuals. Visa's a touch more reserved. American Express obviously is a little bit more reserved, and even the two of those. So I like to think of MasterCard as a riskier. They take on more risk when it comes to their strategy. And so, what's riskier than crypto when it comes to legacy finance? It's not much more risky than that. So
credit card.
Yeah, you know, when you look at it, no, I'm saying like legacy finance. You know, in their eyes, obviously they just what they want is they want somebody that's making $200,000 a year to get a credit card with you know, $100,000 limit. You know, just keep a tab open with them, pay a ton of interest. You know, that's their ideal clientele. But obviously, there's a lot more money to be made with other people as well. You know what's funny, David? I was actually I was sitting at home the other day, and my wife, she's in college, so she had an economics course she was taking, and she was watching this old videos from 1984 in regards to the credit card industry. And so I'm sitting on the couch. I'm over here playing on my phone. And I'm like, what'd you watch? She's like, credit card video, 1984. I'm like, man, that thing looks old. And so anyways, I'm over here just minding my own business. And I hear a little voice speaking. And it's like, and I'm like, huh? I look up. And lo and behold, Elizabeth Warren is over here on my television. I was like, what are you doing over here?
Educating.
And here she was spreading her foot. Now you had a new technology at the time, which was credit cards on plastic that you could go out. Before in the 1970s, it was just pretty much for businesses to use credit cards. So they started rolling out credit cards, or a line of credit for your retail investor. And so of course, Elizabeth Warren's over here pooping on that whole idea. She's like, this 20% interest is not good. People are losing. I'm like, man. I'm like, no, you never stopped. I'm like, you went back in time to foot this thing, man. She looked very comparable to she does now. I'm like, she wasn't
Well, I think I saw. Is that the video you showed me, or that picture you showed me?
I'll upload it.
So she looks like she hasn't stopped aging, or no, not stopped aging. She looks the same now than when she did back in '84. So. But credit card debt is not good. So that to that extent, I'll have to agree with her. But as far as this Mastercard article, I don't have much else to say. Obviously, it's going to drive adoption. It's going to give more people access to NFTs. I can't tell you how many times I went to go buy something from an NFT marketplace, or like through Trust Wallet, deposit money, or MetaMask deposit money, use the ETH to buy NFTs, and anything I use MasterCard, Visa, gets declined. Now you don't have to worry about that. And I think what you'll see places like OpenSea, LooksRare, Magic Eden, you'll see them integrate. You can just buy it with fiat. So imagine if you're listing your NFT, and instead of listing it for 100 Solana, you can list it for 4,000 US dollars, and it goes directly into your bank. So I think that's coming in the future. MasterCard is a giant. Visa already dabbled into the NFT space. You're going to see more and more of this. Super bullish. All right, we're going to move on.
Real quick, take a look at this. Pull up my laptop. There she is. Yeah, do I got sound? Do you got sound on my laptop here? I don't know if this thing has sound or not, but anyways, yeah, she was over here.
Sounds the same.
Look at that. I was so impressed. I had to take a video here on my couch. I was like, "What are you doing in my living room, girl?" I'm like, "This is my time. I'm not even in the studio. I know you're over here popping up." So, anyways,
all right. Let's get on to the very next article here. We are talking about optimism. Now, we didn't break it. We talked about how they airdropped 20 million tokens to the wrong address. They airdropped it to layer 1 instead of the layer 2. What? The hacker returned 17 million tokens after the airdrop blunder. The hacker who stole 20 million OP tokens last week has returned 17 million of them. Etherscan data shows the OP was sent back in 17 separate 1 million token transactions starting at 8 a.m. Eastern time on Friday. Well, where's the other 3 million? Well, here it is. The hacker exchanged 1 million OP for ETH, sent another million to Ethereum co-founder Vitalik, and still has 1 million OP in their wallet. So they got $1 million or a million OP converted to ETH, and 1 million OP still in their wallet. What's up with everyone selling or giving free tokens to Vitalik? That man doesn't need any more money.
I think he was trying to prove a point. He was all like, "Yeah, here's 17 million back to where it came from. Oh yeah, hey, Vitalik, this is for you, for your broke ass freaking ecosystem."
I think it was to make a point.
Yeah, I think it was more of a statement than anything else. No, you know what? It's like, give it all back. You know what I mean? Like, it's like robbing a bank. If I were to go in and rob a bank, and then I were to return 85% of the money, it doesn't make it okay. It's not, you know what I mean? Like, that's still wrong. It's still like, You're not a hero. You're not justified. Like, you're taking advantage of institutions, people, money, because that's all accounted for. So it's not like this money was created out of thin air, or this value. And so
it was meant to be used for their governance. The 20 million OP tokens.
But at the end of the day, like, there's value behind it. And so that value comes from somewhere. So for the 3 million tokens that he ended up holding on to, or 2 million, whatever you want to call it, that is millions of dollars of value that is taken from someone else. And so not justified, not right. It's wrong. And, I know we discussed, we discussed yesterday this whole problem, but just to reiterate, I won't go into depth, but it's not okay. It's not okay to have these mistakes. It's one thing to have flaws in your coding and maybe something got overlooked, because these are complex systems, and you can't account for every single scenario possible hack. Like, they're gonna be vulnerabilities. But when it comes to just an error of just ignorance, because that's literally what it is, and you're not double checking, you don't have safeguards in place to make sure things don't go to the wrong place. And especially on, it would have been one thing if it was one transaction, but the fact that it was, pretty much the treasury, you know what I mean? Like, come on, man. Like, that can't happen. Like, that's like just unexcusable. I mean, there's like no other word for it. It's just like cannot happen, period.
And you need these kind of hackers, right, to keep these people honest. And that is why you take your time. And now in this case, obviously, it was a blunder. And I call it negligence, because if you're airdropping 20 million tokens to the wrong layer, to the wrong blockchain address, like, come on, what are you doing? But I think hackers are necessary. It keeps these projects and these developers honest. Like, stay on top of your stuff, and you don't have to worry about this kind of stuff. And also pay attention when you're airdropping tokens. All right. I'm going to share my screen again, and we are going to the very next article. We're going to Japan, as they are set to loosen restrictions on token listing. Now, Japan was known for being one of the strictest when it came to regulating crypto exchanges and crypto token listings. Well, it looks like they're loosening some of them. The Japan Virtual and Crypto Asset Exchange Association, also known as the JVCEA, would loosen up its screening process. They will shift away from its current stance of focusing on the listing process, and instead, it will supervise the industry by policing the assets once they are listed. So this is I'm going to give you my trust until you break it, versus you have to earn my trust. I'm not sure how you feel about this, Robin, but I'm going to get through the article, and then I'll go ahead and ask you that question. To member exchanges that have problematic coins being traded on their platforms, they may need to delist them if issues arise. In addition, trading venues will be legally required to report any listing plans to regulators despite the removal of the screening process. And it will not apply to ICOs. So, Robin, I am sending it to you first, my friend. The question I posed, is that something, like, what are your thoughts on that? Do you think, is it good to give someone your trust until they break it, or should they earn your trust first?
Well, Japan has a completely different mentality when it comes to finance. If you look at the U.S., Western countries, European Union, particularly the U.S., the idea that you take risk and become a millionaire is something that we're ingrained with. There's a lot of people that are heavy into the lottery, and I'm not saying that there isn't risk or there isn't lottery and gambling in Asia, particularly in Japan, but realistically, the American kind of mentality when it comes to Wall Street is, hey, I need to buy Apple when it's a dollar or whatever. And back in 1990, it's all about this like high risk, high reward, should have, could have, need to invest when things are speculative. And that's just the American mentality. Is it a good mentality? Hell yeah. But, because that is a great way, if you are knowledgeable, you have experience, and you can identify fundamentally good projects, you can make some damn good money. Now, with that said, if you look at Japan, they're a little bit more reserved. They like to not have big rug pulls, when it comes to like they're the companies that they invest in. And so it's a different mentality. And when it comes to cryptocurrency, that's where we're at. There's only like 10 cryptos you can buy. I think there are eight or 10 cryptos that are allowed to be traded on their Japanese exchanges. And the process for even getting accepted there is a multi-year application process. And
you guys,
is it right? Is it good? Is it the right direction? I don't think that's the right questions you should be asking, because essentially it's two different societies and two different ways that they go about it. Less risk, but they're open to cryptocurrency. So they're not like, oh, it's a risky asset, you need to stay away. They're like, okay, it's a risky asset, but how about this? It's flooded with all kinds of new projects out there and it's all kinds of scams. So what we're going to do is we find that the project has value and staying power, doesn't look like a sham, then, we'll list it. But you got to go through the proper procedures. It's debatable whether or not you agree with that mentality. I think it's just a societal thing versus, a country just trying to be more controlling.
Real quick, Robin, what are you eating?
A granola bar here.
Ooh,
your boy got hungry.
All right, so here's the importance of this, right? We got to remember, when FTX got their license, moved into Japan, Sam Bankman-Fried came out and said it's a $1 trillion asset, or $1 trillion opportunity for them. It's a $1 trillion market for FTX and for crypto. And Japan being the third largest economy in the world, this is huge. So what the route they're taking is, all right, list your tokens, and after the fact, we will regulate. And so what I'm assuming they're going to do is they're going to be well-staffed to the point where as soon as the token launches, they're going to look into the tokenomics, they're going to look into the trading pairs, they're going to look into everything. And at that point, they'll make a decision. Shut it down, let it keep going. I think this helps with innovation versus making people wait, like Robin said, years to get a token list. They want to compete on the global stage in crypto. And I think this is a great move. I think it's great for the people in China, people in Japan who are very, very forward-thinking and more advanced as far as their mentality of the future. I think this is great for the people of Japan. This is great for the cryptocurrency market. So I'm super bullish on this. All right, let's move on. I'm going to share my screen once again. And this time we are talking NFTs. A couple NFT articles before we end the show. Warner Brothers joins hands with Nifty to launch Looney Tunes NFTs. Looney Tunes was my stuff growing up, man. The Roadrunner, Sylvester, Tweety. I mean, my God. Warner Brothers, they have decided to launch the NFT to celebrate the 80th anniversary of Looney Tunes. The partnership is with Nifty. They have taken a special way to bring the NFT into the foray, which is by displaying a story-backed, non-fungible token collection titled Looney Tunes. What's up, Block? Whoever's in marketing needs to get a raise. That's amazing. What's up, Block? That's cool. For the players, they'll be able to collect and then take part in the various range of activities and at the same time earn new and exclusive rewards. Some of the other animations include people and figures you might know, characters: Porky Pig, Bugs Bunny, Daffy Duck, Marvin the Martian, the Tasmanian Devil, Sylvester, and Roadrunner. Robin, out of every one of those people I listed, who was your favorite? Who did you grow up with?
Ooh.
Marvin the Martian was pretty tough.
He was pretty sick.
Sylvester
was Wile E. the Coyote? Was he one of Looney Tune? He was.
Yep.
Yeah, I like him, man. He was kind of like.
He's the winner.
He's the realist. You know what
Except
I mean?
he
Like
never won.
Yeah, exactly.
he definitely he's at face value. You knew who he was gonna be. He wasn't. All he was doing is just hungry, bro. He's like me. You over here hungry, can't even wait till the end of the show. And what he's trying to do is just trying to eat some chicken. And so,
Chicken.
and then he's just ripe with disappointment. So, just falls right in line with your boy here. You know what I mean? So,
Yeah, you look like a chicken.
no, that's funny with that article there. At the top, the picture, it almost seems as though it's those are what are they used the picture of Pogs as thing it looks like.
Yeah. Mm-hmm.
Yeah. So
It looks like, yeah.
now here's the thing. If you're not familiar with Pogs, so look at my. So Pogs was probably the definition of a fad. Definition of a craze that lasted, that didn't last. And so I wonder in creating this article, did the author of this pick this picture because they're trying to correlate the craze for the NFT as a fad? And you hear that a lot. And so I just found it interesting.
You think so? You think this is a backward, like a backhanded compliment?
I
Like
think
you're
so,
the king of
man.
them,
I mean,
so-
why else would you put a picture of Pogs on as your, you know what I mean? And like, it is literally the definition of a fad, of a craze that could not last.
Nostalgia, bro. They're bringing nostalgia back with these characters. They're integrating it into NFTs and Pogs. Nostalgia, Pogs, Looney Tunes, nostalgia. There you have it.
No, man, I'm telling you, that's a slight right there, bro. That's somebody being funny.
I think you're reaching there, my friend. Either way, this is news. The NFT market, right? The markets in general, as far as trading volume, sales, prices, they're down. But we're seeing a lot of movement, a lot of people coming into the space. Not just regular people. We're talking ginormous names like Warner Brothers, like MasterCard. And the next article we're going to talk about, which is a perfect segue, is going to be.
But I do think that these big companies are going to be the leaders when it comes to the NFT space. And so, I see you have the artists, creating these one of 10,000 collections, but they're nobodies essentially, or at least in the NFT world, these are people that are in this own space. But when you look at, and I don't mean to say nobody's like they're not important. I'm just saying that like in our space, they come from somewhere that people aren't familiar with, and so it's a great opportunity for people that haven't made a name for themselves to make a name for themselves. And I'm afraid that these institutions are going to come in, and I know you're pulling up Barbie right now, but Warner Brothers, we've seen the Teenage Mutant Ninja Turtles as another drop that's supposed to be coming out soon.
Yes.
And so as cool as to see the nostalgia of these things are, I'm afraid that our NFT space is going to be dominated by the Spider-Man collection, the Batman collection, the Thor collection, and you're going to start pushing away these young and growing artists because at the moment that's what it is. And so I'm just afraid of that's going to be the direction we go. And I think the artist that partners with a blockchain and releases, the format that we have now, I think that's disappearing, and it kind of scares me a little bit, man. And I'm just I'm hoping for the little guy right now, man. That's the way I look at it.
I think there's room. I think there's room for both. So we'll see. We'll see how it plays out. All right, we're moving on. Last article, and then we are done. Barbieverse, Mattel inks multi-year deal with Cryptoys NFT marketplace. Major toy brand Mattel has signed a multi-year partnership with forthcoming toy-focused NFT marketplace Cryptoys to exclusively feature its brands on the platform. Cryptoys is expected to launch in late summer 2022 on the Flow blockchain. With these NFTs, I am seeing a lot of the name Flow being thrown around, right? Flow blockchain. And they just got listed on Coinbase. Very, very underrated. And I believe they were number 3 on the chart for Amazon. Keep your eye on Flow. I'm not saying go throw money at it. Keep your and they are on the flagship product of On-Chain Studios. Now, On-Chain Studios also plans to make a Cryptoys metaverse and other play-to-earn games where Mattel's intellectual property, including Barbie, Hot Wheels, and Masters of the Universe, will be made into playable avatars. And here is a video. Are we ready? Are we able to play this video from my end?
Yeah, good.
You can try, yeah.
No sound.
We can't hear anything.
Yeah, there's no sound on that one. Yeah, I gotta pull it up on my end. Let me see here. Where's your?
The sound wasn't that important. I heard no sound, but the sound wasn't really that important. They didn't really say anything, and it might have been copywritten anyways. But yeah, that's just a little snippet there. That was an article from Cointelegraph. If you guys want to go watch the video with the sound, please feel free to do so. But here you have it.
No,
Mattel.
so since you have
You got Looney
Mattel,
Tunes, you got
since you have Mattel and you have Looney Tunes, do you see maybe some of these like
Avengers.
really high-profile kids franchises coming over to the NFT space? Because right now the NFTs are for adults, right? I mean, that's essentially who's investing in them, because it's at this point it's more of an investment. But
right.
in the same way that you have toys for kids, you have baseball cards for kids, you know, those are marketed and geared towards kids, and, you know, they end up collecting them. And then later on, fast forward 20 years or so, they end up having the value that they have now. Could you see kind of a push in the same direction when it comes to, say, Paw Patrol or Peppa the Pig, or, you know, all these other like little kid shows? You know, Dora the Explorer has their own thing. You know.
Well, here's what I think these companies are smart, right? Look at the biggest age group that is in crypto, right? It's 25 to 35, right? The millennials, on the cusp of millennial on either side. And what did we grow up on? We grew up on Looney Tunes. We grew up on Doug, Nickelodeon. We grew up on, you know, Barbie, Mattel, Hot Wheels. So this makes sense. And I think the other brands will get into it, but I don't think their target market is in the position to be able to spend money on NFTs right now. They're still in their early 20s, late teens. But we will see more and more.
Don't dispute the power of, Dad, can you buy me a... I'm telling you, that literally will fuel an economy.
So check this out. So yesterday, you know, I picked up another sub. It was like a top 2,000 ranked for like 0.2 ETH or 0.3 ETH. And I showed my daughter. I'm like, Ella, which one do you like better? She goes, Daddy, can you buy me a duck? I'm like, you're 4 and no. So I mean, my daughter was fascinated. I showed her my entire NFT portfolio. She goes, Daddy, that's so cool. And so yeah, I definitely think, you know, especially most of them that look like cartoons or are very well produced as far as the artwork. I definitely could see it, but I don't see any. I ain't spending a quarter of an ETH for my daughter to look at a duck and say, oh, I like that duck. Not happening, but you never know what the future might hold.
Not yet.
Not yet. Get a job first. Anyways, Rob, I got nothing else, my friend. You got anything else before we sign off? Let our people go.
No, not really. Just to kind of round it out, I'll pull up my laptop and just kind of give my closing thoughts here on the market, as we didn't really get into it too much outside of the TA.
Holding over 29. That is extremely bullish.
So I'm just looking here. You know, we're going into the weekend. Obviously, if you look at, you know, when the CPI numbers came out, this is what it did. And so at 29,000, I really don't think we're going to hold this. And I think we'll be at 28,000 by the end of the day. I think going into the weekend, we're going to be testing the 27,000. And you know who's not holding up very well right now is Ethereum, as far as compared. So Ethereum's at 1670. Well, it has taken a lot more. It's gone down a lot more than Bitcoin has. So over 6% for the day, while Bitcoin's only down 3%. If you take a look, and this is just the value that I'm getting off of Bitcoin versus, say, Ethereum, you know, the two compared to each other. And so if we were to take a look at the 1 year chart, this right here represents the price versus Bitcoin. So if you remove the idea of the dollar here, and as you get higher up on this chart, the price compared to Bitcoin becomes more comparable. And so here, as an example, you could have bought, it only took 0.8 Ethereum to buy, for
0.08 Bitcoin.
0.0, excuse me. Yeah, I don't know why I can't get the extra zero in there. But basically, if you had, like 13 Ethereum, you could buy a Bitcoin. Now, conversely, we're starting to see the lowest numbers. Like, this is over a year. Over a year, it was a year ago. So, pretty much a year ago, it was at 0.05 compared to the price of Bitcoin. How much Bitcoin you could get with Ethereum. So now we're starting to see the same levels as before. So in the entire year here, it was never at a discount versus Bitcoin as it is now. And so that's why I'm so bullish on, and you can see in the early days of the project, obviously when Ethereum first came out, big price run up. But, just looking at where we're at, and this is kind of the beginning of the year, or mid 2022 here, actually a month ago. But anyways, just giving you, here's December. So from December, actually I can just go to year to date. Yeah.
There you go. This is the price. I was just going to tell you.
Yeah, here you go. Here's the price at discount compared to Bitcoin. And with the merge coming up, this is going to invert. And it's going to outperform Bitcoin on the long term right before the merge comes up, which is only in a couple months if they stay the course, which, might get delayed, who knows. But it actually seems like it's going to come to fruition. And so right now, at a massive discount. Just look. That chart tells you everything you need to know. The lower this goes, the cheaper Ethereum is in comparison to Bitcoin. So there you go. And then lastly, as I mentioned, going down the list, I'm starting to identify what projects I want to get into that are a little bit more risky, and this is 1 to 5% of my portfolio. When I go outside the top 20, and so you don't know what's going to come back. Some of these will never come back. There's a lot of these projects here.
Harmony One at 3 cents.
This is going to be a big buy for me. I like Harmony One because of where the all-time high was. It's availability. So taking a look at Harmony One, got over 35 cents, man. And obviously that's the peak there, but it traded at over 20 cents for damn near 3 months. And
that's
so
10x to just get back to its previous level.
Yeah, not even, man. And great founder team. It has the liquidity. It's barely in the top 100. It's got Binance, Binance.us. Aren't they on Coinbase now? No.
Crypto.com.
So this is definitely, if I can get in on this project at 2 cents, 1 cent, that's kind of my price target. I figure if I can get in at, say, a penny and a half, like 1.5 cents, or even 2 cents, I'm looking at a 30, 40x in the next bull run. So for me, if I put in, say, $2,000 with a 30x, you're at 60 grand, and so that's kind of my mentality there. And maybe it doesn't come back. When you're a project as small as this one is, as far as on the list, it doesn't take much to knock you out. Solana could take punches because they're at the top. But when you're down there, if you have some uh-ohs or some boo-boos, it's you might not come back from it. So anyways, that's kind of where my head's been at.
All right. Well, we got some exciting stuff we're working on over the weekend. So Wednesday, we are back to our deep dive grind. We will have a Tron video out highlighting Tron, Justin's son, the scandal that put Justin's son in a negative light in the crypto community, and also their USDT stablecoin. We did share a preview of the script with our members. If you haven't done so, please go to the community tab on our YouTube page. You'll see it if you're a member. Also, you saw Robin's video. Well, guess whose video is coming up next? My boy right here. I'm going to the store, told my wife, next shopping trip when we come back to town, Doritos, plain yogurt, baby. You'll see me eat some. That'll be fun. That'll be coming out Tuesday, right, Rob?
Yeah, we'll put it up Tuesday. I don't know. We're in no time crunch for those. So when the important ones, the Tron video.
Oh, so for Robin's, we're in a time crunch.
Well, we weren't working on any other videos at the time. I'm just saying.
Dorito can wait.
The Doritos can wait. If you're not familiar with what we're talking about, we do have the membership, which if you see everybody's green name in the chat, they are paid memberships. Starting at $2.99, you get access to our emojis, but you also get access to private content. So we do have a one video up right now, which is more of my day-to-day activity. Just kind of follow me around for the day. Next week, as David says, we're going to do a video on David. So if you'd like to support the channel, help us grow, because we don't have any sponsors. We are sponsor-free. And so if you'd like to help us grow and pay the bills here, we always appreciate any memberships. It goes a long way. It really does. So.
Yeah, and then the week after mine is going to be a Rocco Bottacci. He's going to take a day through his life and all the pastries he eats. I know he eats a lot of pastries.
He is a man of many pastry locations. Like if you're wondering, if you're here in Vegas and you want to know where to go buy pastries, this man will give you a list. He'll give you a list.
Look at that hair. Let's see the hair.
He's got the man bun back here. He's got the
Rocco, you're the man. Rocco, I miss you, bro. I hope you miss me too.
Miss you too, man. Miss you too.
Thank you.
I wonder if I just assume he's gonna be like making pasta, like on his little.
Way to stereotype, Robin.
Hey man, I call it how I see it, man. Have you ever made pasta?
Absolutely. That's one of my favorite dishes.
Now, if you ask David, have you ever made pasta?
From scratch?
Yeah. See.
No.
That's what I'm saying. I'm just saying. I'm not trying to be. I'm not trying to.
Profiteroles.
Yeah,
tiramisu.
Yes.
Profiteroles, dude. Profiteroles are fire.
Yeah, they're very
with
good.
The anglaise sauce, with the crème anglaise.
I fill it up with the pastry cream and then I cover it with the chocolate ganache.
All right. Well, anyway, I'm getting hungry, guys. We need to wrap this thing up so we can get some lunch. All right.
Let's roll the outro music.
All right.
Friends,
all right, guys.
Family, Crypto Fan members, we want to thank you guys so much for being a part of our growing community. Huge shout out and thank you to our main man, Forrest, for coming on our show every single Friday. Guys, this man has not asked for a single thing in return. Please go support him. Go follow him on Twitter at 0xstacker. His YouTube link is in the description of this video. Also, if you want to become a member of our channel, that link is in the description as well. On behalf of myself, Robin, and Rocco, we love you guys. Have a great weekend. We'll see you Monday. Until next time. Peace.
This fool needs a better internet connection, man. That fool's
Smoking on an island, say she wanna ride with me. Took her on a flight, said all her bags from Italy. I sent her with a friend, they shopping there religiously. Whoa, whoa, yeah. You say she love me, but that's when she rockin' Prada bag. Said she ready for the next, I won't not so fast. Slow down, slow down, slow down, girl, don't you crash. Whoa, whoa, yeah. Cause we can mess up that pretty face, but we can fuck up that pretty lady. Tryna kiss up, I'm in your place. Man, this shit so crazy. Never thought I'd be doing shit like this again. Put that effort in, girl, then I repay you. Crash that thing out the park, now I feel like Babe Ruth, baby. This shit I can't do, baby. No way I can't move, baby. Nothing I can't prove, baby. I got 16 missed calls on my phone. Times change, Mickey D's turn into Rabuchon. Kick my feet up, drink leader, smoke on a new strong. Couple margaritas, senoritas, I goof off. I got 16 missed calls on my my phone. Times change, Mickey D's turn into Rabuchon. Kick my feet up, drink leader, smoke on a new strong. Couple margaritas, senoritas, I goof off. Question marks along your brain, wonder if you should try again. Look at me inside your braces. Can't focus when we face to face. Plenty things I could go say. Name a place I go and pay at. Said she want no boo. Been around the world, plenty things I can show you. Taking flights to GA for our soul food. Gotta pay 1K for GA at my shows too. Keep it 1K with my fans even at my lows. Ooh. That's why I'm back. Show your man the things I've showed you. Tell your man how I used to hold you, but I won't hold you. Your new man is lame and all I spoke is true. Light one smoke for you. That sadness comes with cope too. This madness come with shit that's overdue. You strong by yourself, nobody else holding you. But I ain't holding you. You the one I need when I'm off that perk or two. Hit that thing early, got your sleep like curve for you. All these lame ass bitches I curve for you. All these packs and pearls I burnt with you. It's up now, baby, it's stuck. They can look, but they cannot. They gon' hate, so I keep that tuck. All this ice on me like pucks. I work hard, don't need no luck. Only thing I need is my Glock. When there's bread, these birds gon' flock. When they dead, I let them rot. I ain't tryna leave you up, I said stop waiting. And I don't got time for these pussy fuckers playing. You gotta read between the lines that I am saying. Ain't got no time for no more bullshit conversations. Cause I got 16 missed calls on my phone. Times change, Mickey D's turn into Rabuchon. Kick my feet up, drink leader, smoke on a new strong. Couple margaritas, senoritas, I goof off. I got 16 missed calls on my phone. Times change, Mickey D's turn into Rabuchon. Kick my feet up, drink leader, smoke on a new strong. Couple margaritas, senoritas, I goof off.